Hello, everyone, and welcome back to a new episode of Phillip Trading Podcast. My name is Liao, and today we have Yongxuan with us. She's a dealer and product specialist in Phillip Futures. How are you doing, Yongxuan?
Hi, Liao. I'm doing great. Thank you for the introduction.
Okay, good to hear that. So today in our podcast, we will talk about natural gas, and our topic for today is the US natural gas had hit 13-year high and what you need to know. Okay, so for those who are closely watching the natural gas, we all have seen it has increased by twofold since the beginning of 2022 and closed at about 13-year high as gas volumes flowing to the US liquefied natural gas export plants jumped to the most in 7 weeks on rising forecast for the demand next week. Okay, so Yongxuan, can you briefly explain what has happened to the natural gas from both fundamental and also technical perspective?
Okay, great. So for natural gas, the US side, they actually set a benchmark for the natural gas prices to jump above the 9 per million British thermal units early on Wednesday. And it has also driven by the LNG exports, the warmer weather, and also the volatile trade ahead of the pro-month contract expiry. So the US natural gas prices have surged more than 130% since the beginning of the year. And due to the strong demand for the LNG, especially in Europe's side, which is currently scrambling to replace as much Russian gas as soon as possible. In addition, the early heat waves in the US at the start of May boosted demand for the air conditioning and power generation, while the supply growth is struggling to catch up with the demand. And moreover, the working of the natural gas stocks are 17% lower than the year ago level and 15% lower than the 5-year average for this week. And it was according to the EIA's latest weekly natural gas storage report released on May 19. Okay, the part will be for the fundamental analysis. And next we'll go to about the technical analysis perspective. So natural gas actually fluctuate as the traders assess an inconsistent production recovery with a mix of the domestic weather outlook and also with the ongoing uncertainty in Europe and the looming expiration of the June contract. As you can see from the chart here, it's actually a theory which is called the Elliott wave theory. And you can see that after every 5 waves, traders should be aware that the 3 waves corrective reversal back to the former wave at the site here. And with the current shape decline from project target area, seems like that the natural gas may now face a higher degree correction than can retest at 4 to 3 here, 4 to 3 support zone at the former wave of 4 before the bull sign show up again. So I want to say that buying a natural gas at this stage might be too late. So it's better to wait for a corrective setback before entering the position.
Okay, yeah, so indeed, the tight supply and heat wave across the US have pushed up the price this year. Okay, so we have known the fundamental and technical perspective of natural gas. So where do you see natural gas for the second half of this year?
So from my perspective, I think that energy prices are expected to rise more than 50% in 2022 before easing in 2023 and the next year, which is 2024. And other than energy prices, non-energy prices, including agricultural and metals, they are projected to increase almost 20% in 2022, and they will also moderate in the following years. Nevertheless, commodity prices are expected to remain well above the most recent 5-year average. So other than this, in the event of the prolonged war between the Russian and the Ukraine, the prices could be even higher and more volatile than currently projected. The energy commodity has become top of the town after giving over 100% returns in the past 5 months. which is since the beginning of the year. And the rally has eclipsed performance of most of the large cap stocks, and it has been forcing the investors to pay attention. And other than this, the natural gas prices could rise significantly above the forecast levels if summer temperatures are hotter than assumed in the forecast and the electricity demand is higher. So in forecast that, the prices for 2023 reflects our expectation that the rate of the natural gas production will increase next year while the LNG export and demand growth slow, contributing to a higher storage levels in 2023 than in 2022.
Okay, yeah. So I see. In the meanwhile, it is unlikely for commodities to ease, and they will stay elevated for the next half of 2022. Okay. So in that case, what should trader take note of when entering the natural gas futures market?
Okay, there are actually a few things that traders could take note of. The first one will be the store reserve of the natural gas and the global demand and also the weather. Okay, the stock reserve for natural gas is that many countries around the world have stores of the natural gas which they can use in the event of a supply glut. But by storing natural gas, governments hope to alleviate some of the problems associated with increased price in times of reduced production. But in the same time, by keeping stores of natural gas, countries will not need to buy as much during a supply shortage, which could be demand low for a brief period. However, once the country's reserves run out or run low, they will need to buy more, which in the case of a shortage means higher prices in lieu of reduced availability of the natural gas. And next one will be on the global demand. Global demand is also very important as the global demand for natural gas has largely been on the rise for the past decade. And in the next 5 years, demand for natural gas is forecast to rise by around 1.6% a year, with the majority of the rising demand coming from the emerging Asian markets. And that being said, that US is still the top consumer of natural gas in the world, followed by Russia, China, Iran, and Indonesia. And what would be in fact the increasing of global demand for natural gas will have on the prices remain to be seen. If the increase in production from Qatar and America can satisfy the rising demand, prices may not be drastically affected. Like what happened recently, the Russian president, they actually put the gas in storage rather than just supplying the gas to the Europe. This actually created a shortage, raised prices, and also earned the Russian president a lot of money. But his bargaining position is not as strong as he pretends. The Russia has recently cut gas supplies to Finland, arguing that the country is not paying for it in rubles. This also came from the Helsinki announced its intentions to join the NATO, the defense alliance of the Putin opposed. So yeah, and third will be on the weather. With the severe weather, such as hurricanes and storms, can actually shut down the natural gas production hubs for days or even weeks at a time. This means that the reserves will run low as supply gets used up, which would cause the price to increase. And this is also what happened recently, that the US natural gas demand falls as temperature rise across many major metropolitan areas, with a total of US consumption of natural gas actually fell by about 3.5% compared with the previous report week. And the temperature across the south, the mid-continent, and the northeast were above this normal week, while the temperatures across much of the west were close to normal.
Okay, yeah. So just like any other energy futures, we need to take note on the reserve level, which is the inventory level, global demand, and as well as the weather. Okay, so after knowing the what to take note if the traders they want to enter into the natural gas futures market, how can traders take opportunities to ride on the natural gas rally?
Okay, so for natural gas, it's currently in the market that continues to defy the gravity, with the natural gas hitting its best level since the summer of 2008. It is now up almost 150% for the year to date, and traders trying to call the top on many occasions this year will have their fingers badly burned. But even though they have been also expecting that the higher prices have a wild ride in May with the price swinging by 30%, which is a very massive level for volatility of any market. And for now, we have expected that the move through of $9 suggests that this market, natural gas, has further to go on the upside, with some eyeing the psychological $10 level as the next target. But it also been given that this market has been driven by geopolitical concerns, such as Europe is going to get its gas in the future, or do not expect the ride in natural gas over the coming week to be a smooth one. So I also personally think that natural gas is overall still an upward trend during this situation. And other than this, to enter into the futures market for natural gas actually have two sizes, which is about the big size, which is about 10.3 US dollars, 10.3K USD, and also we have a mini size net gas, which is about 2.5K. Yeah.
Okay, all right. Thank you, Yongshen, for the wonderful sharing on natural gas. So for those who wish to trade natural gas, feel free to be in touch with us. You can drop us a message or comment down below at the comment box, and we will get back to you as soon as possible. Now we have come to an end to our podcast today. Once again, thank you, Yongshen, for the wonderful sharing today. Happy trading, everyone, and see you guys next round. Goodbye.
Thank you. Bye-bye.
Bye-bye.